Time for the market reports, some important USDA reports, and the market reacts.
And on top of that, market's still fairly split ag-wise. We'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then several USDA reports this year's row crop acreage and crop progress. And finally, what are the experts talking about? 2 analysts weigh in. So, markets closed the week split again, both row crops and livestock affected. Let's take a look. The week's biggest gain, soybean oil up a little over 2 cents, almost a 4% increase from the previous week. The week's biggest loss, lean hogs, down more than 4 cents. That's nearly a 4% decrease from the previous week. So, several USDA reports recently. One we talked a bit about last week, the yearly acreage report, and also the latest crop progress report, getting us up to speed on how things look domestically on our major row crops so far. Here's what they said. In the annual acreage report, corn once again the big winner. 2025 acres up 5% from last year, and expected to rise or remain the same in 41 out of 48 states where corn is largely grown. Area harvested for grain also up 5% from last year. Soybeans down by 4% compared to last year. Acreages down are unchanged in 25 of the 29 largest soybean growing states. Wheat acreage down 1% from last year, amounting to 45.5 million acres. So, how does that break down? About 23.5 million acres to hard red winter wheat, a bit over 6 million to soft red winter wheat, and over 3.5 million to white winter wheat. Spring wheat acreage estimated 10 million acres. Cotton acreage down 10% compared to last year. Upland cotton area down by 9%, while American Pima cotton area down by 17%. In the crop progress report, in the 18 highest corn-producing states, silking, which is when the female parts of the plant form, at 18%, 4% lower than last year, but 3% higher than the 4-year average. Dough stage, which is when the kernels accumulate starch and thicken, at 3%, the same as last year around this time, and 1% higher than the 4-year average. Condition looking pretty good, with 68% reporting good to excellent. In the 18 highest soybean-producing states, Mississippi included, blooming at 32%, the same as this time last year, and 1% higher than the 4-year average. Setting pods at 8%, once again the same as this time last year, and 2% higher than the 4-year average. Condition also positive, with 68% reporting good to excellent. In the 15 highest cotton-producing states, Mississippi also included, squaring, the forming of the flower buds, at 48%, 3% lower than this time last year and 1% lower than the 4-year average. Setting bolls stage, which is when the fertilized flowers turn into bolls, at 14%, 4% lower than this time last year and 1% lower than the 4-year average. Condition a little discouraging, with only 45% reporting good to excellent. So now you have some context of how things look currently. What did the experts have to say? Well, turns out the acreage report didn't have a big effect on the markets, according to Chris Robinson, while Ernie Goss says, on an ag level, the markets are trending low these days, and gives us some other factors to think about.
We did have a little bit less acres than people had thought for corn, and some of the I states, the bigger producing states, had a little bit of a reduction, but nothing earth-shattering. And really, when that number came out, it was very, very, very quiet. And it's kind of more of the same. We've been in a pretty, not a very lucrative marketing year so far. We had our highs in February, and if I had told anybody back in February around Valentine's Day that that was going to be the high for a while, and we did. We've had a kind of severe, downturn. Wheat dropped $1.50 since those highs. Corn dropped, spot corn, which is corn in the bin, dropped 80 cents. New crop corn dropped 65 cents. And I had that all together. And of course, with soybeans, from those February highs, we had about $1 sell-off. Now, we have had a little bit of a recovery, but it's been a difficult marketing year. It's been one of the more difficult marketing years, really, since I go back to probably 2013, 2014.
I think when we look back on these 2 quarters, that's first quarter of this year and second quarter that we've just finished, I think we're going to say we're in a recession. You look at 10 states, only 10 states had positive economic growth for the first quarter. Iowa and Nebraska, 2 states, had the worst in the nation, over -6% for each of the states. Now, it's annualized, not good at all. And now if you look ahead, it's like a rock skimming across the water, up and down, below and above. So it could be a recession Now, the NBER, National Bureau of Economic Research, they date the recessions. They'll tell us later on what's going on, but what went on, I should say. And I don't think it's been good. And if you look at what's ahead, looking ahead, we can almost say with pretty good certainty that the housing market is in pretty darn bad shape, or about to be bad. Now, this part of the country, in midsection, not nearly what we're seeing in the states of Florida, Georgia, Texas, California, and Arizona. Got some real inventory issues there. So housing is one of the chips that's going to be falling. So economic outlook going forward is not good in the short term. And back to the value of the dollar, I think the value of the dollar is going to continue to move down, and that's good for agriculture. It makes our goods and our manufactured goods, our agricultural goods, more competitively priced abroad. So right now, in our survey, bank CEOs in rural areas of 10 states, looking somewhat better. And I mean, I think we've hit a bottom for the ag sector. Going forward, it looks a bit more positive, and that's after 2023 and 24, not good, of course. 25 was supposed to be a good year. Well, it turned not so good, and a lot to do with tariffs and a lot to do with trade.
And that's it for a deeper look into the markets. Seems crops are going well so far, but econ on a larger level a bit more precarious.